again and welcome. This is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Today is Friday, the 14th of August. We're going to discuss Friday Insights. In fact, I've got a recap for you, a summary of one I think the most important interview of the week, if not the month right now. Professor Jeremy Siegel from Wharton Business School was on CNBC this past Wednesday. And Professor Siegel specifically went into what his thought process is on equities right now, their valuation, and what he sees as it relates to years ahead in equity markets. And you may or may not know this, but I've received my investment consultant designation from Wharton Business School. I had the opportunity to spend some time there, study there, and also have the opportunity to learn from Jeremy Siegel very specifically. In our industry, he is a rock star, not only from the finance world, economics world, but ultimately he wrote a pretty influential book, and a book that, a couple of decades back, Stocks for the Long Run, in the 90s. And that was something where he was right. He called the boom that we saw in the 1990s and beyond. He's also now calling for a multi-decade expansion. And Jeremy Siegel is talking about, with interest rates at zero and the Federal Reserve continuing to add liquidity, we will see that money work its way back into the equity markets. In fact, he thinks that the 2021 estimates on earnings are way too low. Ultimately thinking that, right now, someone could say, well, a lot of economists say that the price to earnings ratio, or the current market PE, is at 20. Just so you know, 16, 18 is fair value. 20 is high as it relates to 20 times future sales of corporate earnings. And that's what how you look at equities, if they're evaluated and if they're fair value or not. So we're at 20, which seems to be an elevated number, as we're seeing a lot of economists and market sort of prognosticators come out and say, be careful. But Professor Jeremy Siegel from Wharton specifically points out that what if we get multiple expansion, meaning earnings are better than expected? He sees 5 to 10% better than expectations for next year's earnings, simply because there's going to be pent-up demand in the system. Now think about it. On a go-forward basis, we will have potentially a vaccine. We will have therapeutics. We will have a majority of the coronavirus case, even though it's a pandemic. We will know how to operate, one, open up a business with it, live with it, number two, and three, medical community will have that much more time year over year and how to address this appropriately and properly with all of the vaccine war that's going on right now and the global coordination. So you add that all in, and right now we have expectations on earnings super low. But as he puts up, you have pent-up demand next year. You have consumers where we had an all-time high. Another key component to the interview that Professor Jeremy Siegel was discussing was, he said that we have a 35% increase in the money supply. I talk about that, the M2 money supply. He basically said that's 3 times the amount that we saw post Lehman Brothers in the great recession that we saw in 2008, 2009. And he said it's something that we haven't seen in 75 years in terms of that large increase, that significantly large increase in the money supply. He said ultimately that's going to be pent-up demand, a spending boom. So we could see the E on price to earnings ratio, the E, the denominator, expand. If the E expands by anywhere 5 to 10%, as Jeremy Siegel is referencing for 2021 go forward earnings as a potential that could happen, then you don't have multiples right now of 20. You have multiples a little bit less, 18, maybe even lower in terms of fair value. So there's a long way to go according to markets hitting all-time highs on a go-forward basis. That's Jeremy Siegel's view, and I'm right in line with that. I can't disagree with that for all the empirical evidence that we just laid out here for you today. So that's your Friday Insights. Thanks for watching. Again, like and subscribe, and truly, thanks for sharing to all your friends and family. Have a great weekend.